welcome to the debate. You know, when architects design a physical central bank or a national treasury, they don't build it out of like paper mache or canvas.
No, definitely not. They use granite.
Right. They use granite. They use steel. Thick, heavy materials that are deliberately chosen to project permanence. The architecture itself is really a physical manifestation of trust.
It whispers to the public, your value is secure.
Exactly. It's binary and it's heavy. But when we transition into the digital economy, well, identifying what constitutes that digital granite becomes incredibly complex. We are looking at a financial landscape where the very foundation of value is, frankly, up for interpretation.
Right, because before the digital era, trust had to be tactile. You needed to physically see the impregnability of the vault to actually believe in the safety of the asset.
Yes. But what happens when the granite is replaced by a string of code? Or, to take it to the extreme, what happens when it's replaced by a digital picture of a space cat? I mean, can you build a global economy on a meme?
I know what people listening are probably thinking. You are really comparing a meme coin to the Federal Reserve? It sounds absurd on its face.
It does sound absurd.
But if you actually strip down the underlying mechanics of how human beings assign value to things, the distance between a national currency and a globally recognized internet joke is entirely a matter of perspective.
And that tension is exactly what we are drilling into today. We are establishing the criteria for what actually constitutes a global reserve asset in the digital age. This centers around a recent publication by Normie Crypto titled Fartcoin or Future: Why Memes Aren't Global Reserve Assets.
It's a fascinating look at whether true value requires concrete structural utility or if collective belief is, enough on its own.
Right. My stance is that true global reserve assets must offer concrete utility. I look at their multi-chain masterpiece framework, which essentially says we need assets with distinct practical functions. And I see absolute economic reality. You just cannot build a durable system on a punchline.
I hear you, but you are totally blurring the lines between a traditional top-down economy and how decentralized networks actually accrue value. I argue that the line this piece draws between so-called practical utility and meme culture is completely artificial.
Artificial? How so?
Because the foundational value of all crypto assets, even the legacy ones that the industry considers built to last, relies heavily on the exact same collective belief, social momentum, and cultural narratives that drive a meme coin.
Well, let's start right there with the concept of practical utility, because I think we need to define what we mean by built to last. If we are talking about a global reserve currency, we are talking about the bedrock of a financial system.
Right.
The Normie Crypto framework explicitly outlines that a reserve requires what they call the shield of security and the diamond hands of long-term stability.
Okay.
Now let's look at the mechanics of that.
Okay.
In traditional finance, corporate treasuries, sovereign wealth funds, and global supply chains operate on risk models that demand absolute predictability.
Predictability in what sense, though? I mean, just price?
Price, settlement, liquidity, all of it. Let's say you're settling a $100 million cross-border invoice. You cannot use an asset like Fartcoin. That is what the authors call the volatility trap.
Because of the wild swings?
Exactly. If that asset can lose 40% of its value between breakfast and lunch because an influencer tweeted a joke, the velocity of money stops. Commerce freezes. You literally cannot run a supply chain.
Yeah, that makes sense for legacy operations.
Right, which is why the framework offers a structured alternative. You have Bitcoin as the vault, relying on its capped supply. You have Solana for high-speed retail utility.
And why does the speed of Solana specifically matter here?
Because low latency prevents price slippage during those global commerce settlements. And then you have stablecoins pegged to the dollar, acting as the shield against volatility. That isn't just theory. That is structured, logical architecture. It is digital granite.
That is a very clean, rationalist view of the world. But I challenge whether those traditional stability metrics are universally applicable to these new financial paradigms. You're taking 20th century central banking criteria and just pasting them onto 21st century decentralized networks.
I wouldn't call it pasting. It's maturing.
But let's look at the multi-chain masterpiece you just described. It praises Solana because it makes crypto just work instantly, and maybe Litecoin for cheaper, faster pocket change. Those are technical utilities.
Crucial technical utilities.
Sure, but here is the reality of the open-source digital economy. Technical utility is infinitely replicable. It's a commodity.
Replicable?
Yes. Any competent team of developers can fork a blockchain's code by tomorrow afternoon. They can create a network that is mathematically identical to Solana. Just as fast, just as cheap. What cannot be easily replicated, copied, or forked is human attention.
Okay, but
You can have the most perfectly engineered, frictionless blockchain in the universe, but if there is no community looking at it, it has zero liquidity and zero value.
that's an interesting point, though. I would frame it differently. Capturing attention is not the same as retaining value. A punchline gets a laugh. It commands attention for a second.
But sometimes that second is all it takes to build a network.
But a legacy requires infrastructure built to endure when the laughter stops. Attention without underlying utility is just noise. Equating the volatility of a decade-old asset like Litecoin to the wild swings of Fartcoin is like comparing the fluctuating value of commercial real estate to, the lifespan of a firework.
A firework, really?
Yes. Both go up and down. Real estate markets have major corrections, just as Normie Crypto admits in their Normie Verdict section that even legacy assets have recently experienced a severe market decline. But only one of those things is built on a foundation of secure, tested utility.
I see what you're saying, but
A firework is explicitly designed to explode, capture your attention for a fleeting moment, and then disappear into the dark. It has no underlying physics to arrest its fall. When a firework burns out, there's nothing left.
Is it just noise, though? Or is it a mechanism we just don't want to legitimize? If a meme coin captures the internet's attention, even for what the piece dismisses as a fleeting moment, it is demonstrating an immensely powerful network effect.
A network effect based on a joke?
In the modern attention economy, the ability to aggregate millions of human beings around a single digital artifact is the absolute scarcest resource in existence. Traditional finance fundamentally undervalues this because they look at the name Fartcoin, they see a joke, and they stop thinking. They miss the mechanism entirely.
And what exactly is that mechanism? Because from where I'm sitting, the mechanism is just a speculative casino.
The mechanism is a Schelling point. It is pure game theory. People don't coalesce around a meme coin because they think the code is superior. They choose it because they believe everyone else will choose it.
Right. Herd mentality.
But when you have rapid, decentralized consensus building, you create a persistent liquidity pool. You said earlier that there's no fundamental utility to catch a meme coin when its price falls. You're completely ignoring the community. Deep, irrational community loyalty creates liquidity that algorithms can't easily drain. The social identity is the floor.
I see why you're drawn to the Schelling point argument, but I completely disagree that social identity forms a reliable floor. When Bitcoin experiences a drawdown, the price eventually finds a floor because the utility, secure, permissionless transfer of value, remains intact and necessary to millions of actors.
But fireworks are designed to burn out. What if this phenomenon is less like a firework and more like a religion? You can't put a technical floor on a belief system, but it is historically the strongest, most enduring foundation in human society.
Religion?
Yeah. If a network survives a massive 90% drawdown simply because its community stubbornly refuses to abandon the joke, isn't that a far stronger indicator of reserve potential than a temporarily stable price chart manipulated by a central bank?
I am not entirely convinced by the religion analogy because a financial asset fundamentally must facilitate trade between two parties who don't share the same belief system. That is the entire point of money.
Well,
If I want to buy a shipment of lumber from across the world, the supplier doesn't care about my community's social identity. They don't care if we have diamond hands. They care about settlement finality. They care about transaction fees, and they care whether the value of the asset will be the same when the transaction clears as it was when it was initiated.
which is why they use the dollar.
Exactly. Or in the digital realm, stablecoins pegged to the dollar. You cannot pay a supplier in attention. You have to pay them in an asset that holds real-world value. And the stablecoin acts as that bridge, providing the shield for actual commerce.
Right.
But
That requires real-world audits, banking relationships, collateralization, and regulatory compliance. It requires a bridge to the existing global economy. A meme coin does not have institutional banking relationships. It is not being integrated into point-of-sale systems.
But how did the dollar achieve its perceived real-world value in the first place? Fiat money is basically the most successful meme in history.
I wouldn't call it a meme.
it used to be backed by gold, which is your structural utility, but we stripped that away 50 years ago. Now it's backed by men with guns and social consensus. We all just agree a piece of green paper is worth something. The only difference is the enforcement mechanism.
I have to jump in there. That enforcement mechanism is precisely what creates the utility. The US dollar has a tax mandate. You are legally required to pay your taxes in dollars.
Sure.
That creates an artificial, inescapable demand for the currency. Every citizen and business needs dollars, which creates mandatory velocity and persistent utility. Fartcoin has no tax mandate. No one is forced to use it to stay out of jail. Therefore, it must rely entirely on voluntary fleeting attention, which brings us right back to the volatility trap.
I will grant you the tax mandate creates a forced floor for fiat. But let's look at how the crypto industry tries to manufacture its own version of that floor. This brings me to the glaring cultural contradictions embedded right in the heart of this normie crypto framework.
Contradictions? I think it's pretty consistent.
They bend over backward to separate their multi-chain masterpiece from the wild west of the meme sphere. They want to wear the suit and tie of traditional finance. Yet how do they choose to communicate this serious, structural, institutional framework to their audience?
By building a community.
By using the exact same psychological and cultural levers as the meme coins they criticize. Their central emblem is HODL for life. Their core philosophy is never panic, always HODL.
That's just marketing.
They are monetizing this by selling $50 HODL crypto tank tops with rocket designs and $15 magic mugs featuring a space cat telling people to be always cool. They say the digital economy must mature out of meme culture, but their entire survival strategy during a market decline relies on meme-driven mantras.
I think you are confusing the marketing layer with the underlying mechanics of the asset.
Am I? Or is the marketing revealing the actual mechanic? If the technical utility of this masterpiece architecture was truly self-evident and self-sustaining, like if the digital granite was really there, you wouldn't need a Space Cat mug to convince people not to panic sell during a dip.
Well,
Normie crypto is successfully branding itself by adopting the exact same social consensus mechanisms that drive the meme coins they are laughing at. HODL, diamond hands, rockets. This is the native language of the meme coin. They are proving my point. The social layer isn't a distraction from the utility. The social layer is the utility.
That is a sharp observation, but it fundamentally misinterprets the function of culture within a mature financial system. Leveraging cultural touchstones to build community resilience is different from the asset itself being nothing more than a joke.
Is it, though?
Yes. Look at traditional finance. Wall Street has its own meme culture. It has the charging bull statue in Lower Manhattan. It has terms like bear market, dead cat bounce, and blue chip. Banks spend billions on marketing, naming stadiums, and creating logos to project an aura of trust and stability. But the culture supports the utility. It does not replace it.
But Wall Street has earnings reports.
Right. The charging bull is a symbol of financial optimism, but the actual tangible value of the New York Stock Exchange is based on the quarterly earnings of the companies traded there. There is cash flow, there are dividends.
Exactly. Physical products.
So when normie crypto uses a term like diamond hands or puts a space cat on a mug, they are certainly utilizing modern internet culture. I will completely concede that. But they are using that culture to point the investor toward a structurally sound architecture.
You say they are pointing toward a structurally sound architecture, but without the physical earnings or the physical products of Wall Street, the belief network in crypto takes on a vastly more structural role.
Which is exactly why the technical infrastructure has to be paramount. If there are no physical earnings, the asset must provide an undeniable service. That is why the framework emphasized Solana making crypto just work instantly for the retail investor. The service is the utility.
Right, but
They are using the meme to communicate the value of the vault. The text explicitly states HODLing only works if you are holding an asset with actual utility and a future. That is the crucial distinction. If you HODL a meme coin that has zero utility, you aren't participating in an economy. You are just holding a decaying joke.
I agree that holding onto a decaying joke is a terrible investment strategy, but I completely reject the premise that social consensus cannot be the very utility that ensures the asset has a future. Let's trace the logic of your vault. You argue that Bitcoin's utility is its capped supply, making it digital gold.
Yes, the 21 million cap.
But a capped supply is just a parameter and a line of code. There are literally thousands of dead, forgotten cryptocurrencies with capped supplies. Why did Bitcoin become the vault while they died? Because millions of people collectively agreed to treat it as the vault. They built a culture around it.
The first mover advantage played a role there too.
Sure, but the HODL for life emblem isn't just marketing for Bitcoin. It is the behavioral mechanism that gives Bitcoin its store of value properties. If the community stops believing that capped supply means absolutely nothing.
But the belief doesn't exist in a vacuum. The line between a serious asset and a meme isn't false when you introduce real-world integration. You cannot decouple the asset from the infrastructure being built around it. We talked about stablecoins acting as the shield that requires regulatory compliance.
Regulatory compliance, right.
The Wild West is settling down because the global market is demanding integration. You mentioned earlier that technical utility can be copied, and while that's true in a vacuum, network effects compound around the most secure, reliable, and compliant infrastructure. Institutions aren't going to plug their APIs into a network run by a decentralized mob of space cat enthusiasts. They're going to plug into networks that have predictable governance and legal clarity.
You bring up stablecoins again, and ironically, that might actually be where we find a point of convergence. I will readily concede that extreme, unmitigated volatility driven purely by the whims of a social media feed is a massive, perhaps insurmountable hurdle for widespread institutional adoption today. A business simply has to know its margins.
Exactly.
To that end, the assertion that stablecoins are the shield for actual commerce makes logical sense in the current environment.
So you agree that the infrastructure is necessary?
I agree it's necessary right now. But I would argue that stablecoins are merely a transitional technology. They are a temporary crutch. They rely on the legacy fiat system, the central banks, the audits, the traditional dollars, to provide the stability that the decentralized networks are still developing organically.
But if stablecoins are just a temporary crutch, what are we actually building here? How do these networks ever achieve organic stability without tethering to fiat?
Through time, saturation, and the very cultural resilience you see printed on a Space Cat mug. As a network grows massive enough and the liquidity pool deepens enough, the volatility naturally dampens. The assets that are deemed just normal tomorrow won't be normal because they had the best algorithmic code. They will be normal because they captured and held the public imagination so deeply for so long that they simply became institutionalized. They transitioned from a joke to a movement to a standard.
And I maintain that they will only hold the public imagination if they actually function flawlessly when the public tries to use them for something other than speculation.
Fair enough.
Let's bring this together. If we step back and look at the core of our disagreement today, it really comes down to what we believe forms the bedrock of a future financial system. My stance, drawn from the framework provided by Normie Crypto, is that for the digital economy to mature, it absolutely must rely on assets that pass rigorous tests of structural stability and concrete utility.
And my view is quite different.
Right, because a global reserve asset cannot be built on the shifting sands of internet attention. The multi-chain masterpiece, with its secure vaults, high-speed rails, and volatility shields, offers the necessary practical infrastructure to actually run a global supply chain. Meme coins, no matter how much incredible attention they temporarily command, remain fleeting entertainment. They are fireworks, not foundations.
In my summaries, that while technical infrastructure obviously matters, clinging to it provides a false sense of security. It artificially separates the meme from the reserve. The underlying reality of digital networks is that technical utility is a highly replicable commodity. Human attention and social consensus are the true, unforgeable scarce resources.
Even without structural utility.
The very survival of these legacy assets,
The reason they even have the liquidity to function as a vault or a payment rail in the first place relies on the exact same community identity, the same shelling points, and the same cultural rallying cries that drive the meme sphere. By dismissing the mechanics of meme culture as just a casino, traditional frameworks fail to understand the actual engine of value creation in the 21st century.
We certainly find convergence on the reality that extreme volatility is a massive barrier to practical daily commerce. A business cannot operate in a constant state of financial vertigo. However, our fundamental disagreement remains. Is the foundation of long-term value rooted in structural, technical utility, or is it deeply ingrained in social consensus?
It forces you to look in the mirror and ask what you are actually valuing when you buy into these markets. Are you buying a network, or are you buying a belief system?
Which brings us right back to our original metaphor. Are we building a physical vault out of digital granite, relying on the unyielding mathematics of supply caps and transaction speeds to secure the future of the economy? Or are we building a stage, relying entirely on the collective belief and the enduring, irrational attention of the crowd to hold the architecture together? The debate asks whether you are building a portfolio that can weather a global storm or just chasing the next laugh. Ultimately, the listener has to decide if the digital assets they hold are truly built to last or if the granite they thought they were standing on is just a very convincing illusion. Thank you for listening. We will see you next time.